Now, what are the street advisors telling you about your money market fund account that they have been telling you it is nonsense for so long? What are the street financial advisors saying about money market funds with the falling interest rates? Now, is it still worth to have a money market fund account? Is it time to close your money market fund account? Hold on, and we'll get to answer that question in a few minutes. Hi everyone, this is Finance Focus with Andrew. Welcome aboard. This is our Money Market Fund weekly review, where we get to review the rates of the money market fund and discuss anything that is trading about money market fund. If you are coming across this platform for the first time, welcome aboard. Subscribe, press that notification bell so that you don't get to miss any of our financial tips. We drop a video related to personal finance every day at 7 p.m. Now, let's dive into the main topic of this video. That is the weekly money market fund review. And this is where we start. Unfortunately, we are not able to review the rates. You know, we review rates as per every Friday. We had some holiday the other Friday, last week but one. So we'll be comparing the rates of 2 weeks. That is from the 30th of May to the 13th of June. So that is 30th of May to 13th of June. And what do we have for the 13th of June? That is the latest interest rates. The market is not looking good. That is the truth. The interest rates are going down day by day. The market moved from an average of 9.51%, that is on the 30th of May, to 9.29%, that is after tax, that is on the 13th of June 2025. So it means that majority of the money of the fund managers offered lower rates than they were doing 2 weeks before. Now, let's see how the numbers look like. And we start with checking on the top 10. Of course, even if the interest rates are low, there are those fund managers that are giving the highest rates. So let's check on our list who appeared on the top 10. And number 1 is Gulf Cap, but there is a danger somewhere. Gulf Cap is still at 13.87%, more than a whole month down the line. For a money market fund, that is not okay. That is not acceptable at all. Money market fund rates change on a daily basis. So Gulf Cap is trying to tell us that where they invested their money, they have been getting the same rate of return for more than a month. So if you're a Gulf Cap investor, check on your fund manager. Something might be wrong. Number 2 is Saiton with 11.48%, that is after tax. Number 3, Gen Africa at 11.14%. Then number 4 is Kuza at 11.02%. Number 5, Etika at 10.89%. Number 6 is Rofty Cobon at 10.74%. Number 7 goes with Orient Kasha at 10.58%. Number 8 goes with Avocap, 10.53%, and that is where we close the 10% mark. So we get to the single digit. At number 9, we have Nwealth at 9.89%, and at number 10, we have Nabo Africa at 9.83%. So those are the companies at the top 10. And you can see that we have some in the top 10, but they are offering single-digit interest rate. That is a very clear indicator of how low the interest rates are. Now, let's look at the bottom 5 on our list. The last one, Equity, 4.60%, Mayfair, 6.74%, African Alliance, 6.75%, ICEA, 8.29%, Genghis, 8.37%. So those are the bottom 10 in terms of interest rates. But remember, interest rates is not the only factor that you consider when choosing a money market fund. I'll say that time and again. Now, let's see the changes in terms of interest rates. And if you check on this table, it is clear that the interest rates are on a downward trajectory. You can see that out of the 27 that we have on the list, only 2 made a positive change. 3 were constant, and so it means the other 22 had a negative change. That is, their interest dropped for the 2 weeks. The only 2 that had a positive change was Nambo Africa and Madison. Those who stagnated were Gulf Cap, KCB, and Equity. Then all the other money market fund indicated a negative change in terms of interest rate. But how do we explain this? Now, the returns you get from a money market fund are strongly related to the returns of the treasury bills. Last week, we saw the 364 days treasury bill paper joining the other papers in the single digit range. It dropped to 9.9% first, but now the latest result, the 364 paper was trading at 9.75%. That is how low the interest rate from treasury bills have gone. The 91 days paper is currently at 8.2%. The 182 days is currently at, that is 8.4%. So you can see the treasury bills are between the range of 8 and 9%, and that is where majority of the money in the money market fund are invested. That is where we are experiencing a downward trajectory in the money market fund interest rate, and this is expected to happen as far as the returns from treasury bills are going down. We also saw the Central Bank of Kenya dropping their CBR rate further from 10% to 9.75%. A drop of the CBR rate means that the banks should lower their lending rates, and the investing rate or the rate of return from the financial instruments are expected to go down. So that is it for the Kenya shilling-denominated money market fund. We introduced an analysis for the dollar money market fund, so we can pass by and see how they are faring. The interest rate dropped from 4.33% to 4.32%. No much changes. We have Etika at the top with a 5.3, followed by Kuza with a 4.94, all the way down to Absa with 3.77% and Britam with 2.86%. Now, we said that the importance of this dollar-denominated money market fund, maybe you earn your salary in dollars, you don't have, and you want to maintain your emergency fund in a money market fund, you don't have to convert that to Kenya shillings so that you can invest in a money market fund. You can choose to hold your investment or emergency fund in a dollar-denominated money market fund. So that is the statistics that you have for the money market fund. Now, the next question is it still worth to hold a money market fund? And this is my honest response. Different financial investments serve different purposes. We said that the money market fund is the starting point. It is a parking account for your money as you think to navigate about other investments. It is a parking of your emergency fund that you can run to in times of crisis. Now, despite the dropping interest rate, don't be so quick to take your money market fund back to your bank account where it will earn a 0% interest rate. Again, don't be so quick to take your emergency fund from your money market fund and invest in a treasury bond that will mature in 15 years. And in case you need that money, you won't be able to access it. Don't be so quick to take your emergency fund from a money market fund and invest in the NSC. That is quite risky. You may gain, you may lose, and that is, we are talking about your emergency fund. So as for me, the money market funds are still serving their purpose despite the drop in interest rate. It is a parking account for your funds as you think of other investments to make, as you think of other projects to take. It is a parking account for your emergency fund, and it better be in a money market fund than in a bank account. When I say it is a parking for money as you think of other investment, this is what I mean. If you are interested in investing in treasury bonds, you know that the minimum amount you need is 50,000. But maybe you are not able, you don't earn enough to be able to get 50,000 in a single transaction. But you can only save 10,000 per month, but your goal is to own a treasury bond. So deposit that 10K in a money market fund. The other month in a money market fund, the other month in a money market fund. Now, once you get the 50,000, withdraw from the money market fund and deposit and invest in treasury bonds. So that is what we mean by a parking account. So if you really understand the purpose of a money market fund, the dropping interest rate should not worry you and make you think of closing down your money market fund. So that is my opinion, but I would really appreciate to hear your opinion. So drop your views in the comment section of what you think. If this video was of any help to you, share it to that person that you feel they need it, so that we can continue transferring this gospel of financial literacy to as far as we can. Otherwise, see you in the next video.